Whatever type of investor you are, a company's market cap is an essential metric to understand the size and value of a company. In recent news, Apple hit a $3 trillion market cap. This makes Apple more valuable than Facebook, Google, Amazon, Tesla, and Bitcoin. But if you're just beginning in investing, you might be wondering how Apple stock can cost less than these aforementioned companies, yet still have a higher market cap. Well, in this video, we are going to explain how market cap is calculated and how it affects a company and its stock.
So, adding on to Daeza's point, an asset class's market cap is important because it defines the riskiness of the investment. The larger the market cap, the less risky the investment, and vice versa. This is because as an asset class gains more value and the market cap grows, the liquidity increases and the volatility decreases. Now, when it comes to market cap, you all know that there's three categories: large cap, mid cap, and small cap. Large cap assets have a value of $10 billion or more. Mid-cap assets have a value of $2 billion all the way up to $10 billion. And finally, small-cap assets have a market cap value of $300 million all the way up to $2 billion. And for those of you wondering, anything under 300 million doesn't necessarily get classified. So for all you degenerate gamblers and investors out there who like your meme stocks and meme tokens, y'all know what type of time you're on. So overall, if you're looking to calculate the market cap of a stock, you're going to take the number of shares outstanding and multiply it by the current share price of said stock. And if you're looking to calculate the market cap of any cryptocurrency, you're going to take the number of coins or tokens in circulation and multiply that by the current price of said coin or said token. So guys, if this video helped you out, leave a comment, drop a like. We'll catch y'all later. Peace.